Welcome to this conversation on Business Redefined. On the 29th of September, President William Ruto tabled his legislative agenda before the joint sitting of the National Assembly and the Senate, part of which focused on matters regarding taxation. In his own words, the president said that we are overtaxing trade, undertaxing wealth. In this conversation, we want to delve deep into what are the taxation options on the table for the Kenya Kwanza administration.
The economic principle of equitable taxation requires that the tax burden reflects ability to pay. This is best achieved by a hierarchy that taxes wealth, then consumption, then incomes, and lastly trade. We are overtaxing trade and undertaxing wealth. We will be proposing tax measures that begin to move us in the right direction.
We are in agreement fully with the new administration that taxes must be collected and taxes must be paid by all Kenyans. Everyone must pay what they owe. We have further agreed that for those taxpayers experiencing difficulties, we will have to adopt a different approach so that we encourage them and we walk the journey with them, because some of them, they are going through genuine difficulties, and we must empathize with them and we must walk with them. That is a conversation that there is no need of closing any business. We just have to work with them and give them accommodative plans and work with them so that their businesses can come back. That, to me, I believe is a genuine approach that we should all adopt. So the current administration is very clear: people must pay taxes. All of them, everyone must pay their equal share. It is how we go about dealing with the small percentage that probably is not paying taxes rightfully, maybe because of difficulties, or those probably do not understand their tax obligations.
So I think that from a continuity perspective, perhaps the new government is still going to continue with the current tax priorities, such as trying to have organizations compliant with the already laid down tax legislation. So they are probably going to tighten the tax loopholes, work with technology and the Revenue Authority through the National Treasury to ensure that they have maximum collections from taxpayers. So that's definitely going to be one of the priority. And I also believe that the Finance Act has just recently been enacted in June. I do suspect that they're going to have to issue supplementary budgets to bridge the deficit, which can only mean increase in taxes.
I think over the last few years, I've seen a lot of revenue audits, and basically KRA looking after everyone to see whether you're tax compliant or not. Yeah. A lot of assessments. I've had to deal with a lot of cases at the Tax Appeals Tribunal, basically clients who are not happy with the assessments that have been raised. So there was a lot of audits that were being done and assessments issued here and there. As to that makes KRA high-handed, maybe and maybe not, because at the end of the day, it is their mandate actually to collect taxes. But on the other side, they are supposed to collect those taxes within the law. So just get a shilling of what is expected of you as a taxpayer, not a shilling more. So that's, the benefit of tax. You just pay what you're required to pay and not a shilling more. So if there are many instances, for example, on cases that I've worked on where, it wasn't deserving of, assessments from the Kenya Revenue Authority. So on that side, you could say maybe they were pushing a little bit so much.
How to tax Kenya's vastly informal sector has presented a policy headache for successive governments. In finance year 2019, there was an attempt to the presumptive tax, but this did not work out. So the question is, what are the options on the table for the Kenya Kwanza administration?
It's very, very difficult to tax a camel trader the same way you tax the tea farmer and the coffee farmer and the fisherman and the wheat farmer. You basically have to look at economic activity of each and every region and put policies on how to collect taxes from those people. Some of them are doing 3,000 animals and they are not paying taxes. So you have to work with counties. You might even be forced maybe to tweak the constitution or maybe using an executive order for the President Ruto to basically work between national government and counties so that counties can maybe collect on behalf of Kenya Revenue Authority and they get a percentage because they are closer to the table. They are able to basically be able to see these particular guys migrate at this particular level, these 3,000 camels, and at what particular point do you collect taxes? They know all that. They're on the ground.
So presumptive tax was there a few years ago. It did not work out because of some complications in terms of logistics and how this would be collected. It would be interesting to see how the government intends to bring this back into into the market and into taxpayers actually making payments for that. Remember, the presumptive income tax was really for the MSMEs, the guys who are not really paying corporate tax. So with this reintroduction, I believe that the government is trying to nab the informal sector, bring them into the tax loop so that everyone pays their fair share of taxes.
Presumptive tax was there. It was actually proscribed in 2000. It found its way back recently. And one of the things I hate about that particular tax is the aspect of which you do in terms of collection by basically turning it to be like a turnover tax. One of the things actually you should be very careful about taxation is that sector you have talked about, agriculture. So we should first, just like the way we did for the property market, capital gains, we kept it as zero. Basically, you have seen from 1985 the way the property market in Kenya has rivaled some countries, including Dubai, including UK and all that. So you must basically forget around taxation of agriculture. And wherever you have to impute any or include any particular taxes in agriculture, you must be very careful and should be as little as possible. You can even basically say in agriculture, what is subsistence? Yeah? So you basically define subsistence, maybe 10 acres of land, and of course maybe somebody has 10 sons who are eating a lot of ugali. I mean, what I'm trying to say is that is subsistence. Once you define that, then the rest, you basically put the minimum tax you can, because doing agriculture here most likely is rain-fed, or maybe you have sunk a borehole. It has very high cost. So it's a matter of trying to tax it as little as possible so that you let it grow over a period of maybe 20 years. Then you can go back the way we did for capital gains tax.
So I think we are likely to see additional taxes coming up, I think, because where exactly is this going to come from? How are you going to plug this hole? Number two, expanding the tax base. They're talking about 2 million additional taxpayers from the current number we have of about 6.9 million taxpayers. So that, in my view, is where they are going to plug the hole. I don't believe that there are too many new taxes that can come up, because what else? Kenyans are already taxed, unless you're talking about moving the VAT rate to 17%, for example, or 18% to comply with or to be aligned with the region. But I don't know whether there is any further headroom to tax Kenyans above that. We've seen from an excess duty perspective, we are taxing almost everything.
The national government must assist in tax collection. How many? For example, Francis Kamau, and I'm hoping I have, but maybe I have 80 electric meters. For what? So that means I have 80 tenants, so to speak. And then do you need to check whether they are basically fluctuating, or the meter values or figures are fluctuating, to show that there are people staying in those. So that's what I'm trying to call e-government, ensuring that Francis Kamau has bought land, and that particular land immediately is registered at Kenya Revenue Authority. We start discussing about stamp duty and, of course, CGT, that is capital gains tax.
So when reading the manifesto for Kenya Kwanza, you only notice that aspiration to increase the tax base once. When you read it further, to just check how they intend to do it, there's nothing in that manifesto that talks about increasing the tax base. As opposed to that, you have a lot of tax incentives. So under each thematic area that the new government wants to focus in, instead of talking about increasing the tax base, they're talking about incentives. So talk of agriculture, for example. They're talking about how do we reduce the cost of inputs. And how do you do that? You do it by reducing the taxes that are being paid on inputs, for example. Talk of manufacturing, and especially the focus on pharmaceutical kind of manufacturing. They're talking about tax incentives again. How do we get pharmaceutical companies set up in Kenya, and when they set up, do business in Kenya and basically help with the health issue. So they're not talking about increasing the base, but they're talking about the incentive for guys to actually come and invest into the country. When we talk about sports, again, they're talking about how do we ensure that we use the tax that is already collected to encourage sports within the country. So there's more of tax incentives as opposed to increasing the tax base.
Welcome back to this conversation on Business Redefined, where we are looking at Kenya Kwanza administration and the potential tax options it has on the table. We began part 2 by having a conversation around the IMF program, the revenue targets, and what this means for the new administration.
Yeah, on the 16th of September, National Treasury published a statement of receipts and exchequer issues. So within it, you see we have a yearly tax revenue target of about 2.071 trillion. And as at August, our revenue was 280 billion. Our tax revenue was 280 billion. So if you kind of try prorate the 2.071 by 12 months, you will notice that perhaps we are lagging behind by around 65 billion in terms of tax revenue. But there are also other sources of income, which also, the Revenue Authority or the government is trying to get hold of and use. So my comment is, it appears as if we are slightly below target in terms of our revenues. And it's an interesting aspect also for the new government, because you actually need the money to not only do whatever the government had promised with the budget, but also achieve these new things that, for example, the new government also wants to implement.
So one of the areas Uhuru has really worked very hard is to ensure that he has seen the revenues increase. Actually, Kenya, it's basically at good levels in terms of the collection of taxes versus GDP. Of course, not like Tunisia, which is 34. We are still defending between 15 to 18%, but we can take it with Tunisia at 34%. So already at East Africa, we are the best. So he can build from that. In terms of extending the tax policy, the tax base, so to speak, yes, there's a lot of work that can be done. But remember, there are two things that we need to consider. Kenya Revenue Authority and collection of taxes, they are attached to the hip. So sometimes KRA collects the wrong taxes, as it were. They'll come, scare you to hell, and then you pay some of the things you are not supposed to pay because of they are collecting under duress, including the DCI involved in the whole process of tax collection, which is quite funny. But having said that, the expansion should be done in a meticulous way, having consulted, but then go and reform Kenya Revenue Authority. It must be reformed to be a Kenya Revenue Service, not authority, and it must also have an economic department to basically think around this particular cow. I've milked all the milk. Am I now removing the blood? Or maybe it's dead and I still want to milk it. And what particular point, where does it come that I'm shearing this sheep to the skin and at what particular point do I stop? So those are very difficult situations for Ruto, the Honorable Ruto, the president, to basically consider in terms of trying to balance. It's a delicate balance. Of course, Uhuru basically had a bit of issues, but he succeeded at a certain point.
And it's important in this process, we educate the Kenyans, we inform them, we get them to, all of them, to embrace the responsibility of paying taxes. So that should not be really a matter of we are using force or anything, but it's an obligation. It's also important to know that taxes are prescribed in law, and there is no exemption, very limited exemptions. They are prescribed by law, and again, calculation of taxes is mathematical. There should be no dispute between the taxpayer and the KRI on the calculation. If there is a misunderstanding or misinterpretation, then through dialogue, we should be able to agree, and then also agree on what should be done to get that tax paid.
Many Kenyans are of the view that they are overtaxed, whether it is through the direct taxes such as pay as you earn or indirect taxes such as excise and VAT. So I venture to ask the panelists that we have, are Kenyans really overtaxed?
When you look at, we look at the brackets of taxation, Kenya has the lowest tax in the region. So unless maybe you're talking about a country out there, but even you go to UK, you'll be shocked. We are dealing with 40%. I think it's a very nice song, especially for protagonists in terms of political field, to basically voice out things all over. The only thing we need to do is to go back and understand that the little we pay, are we really getting services for that? But in terms of a taxation, no. Actually, the VAT in the region is 16%, petroleum is actually 8%, the rest of the countries is 18%. When you look at capital gains, now there is basically a whole discussion of 12%. It was coming from 5%. Before that, it was 0%. The other countries is 30%. Of course, there is a whole discussion about whether we are considering certain cost and infraction adjustment around capital gains, but it is 30%, as it were. So Kenyans should basically work towards ensuring that once KRA is reformed, so there's no that anti-harassment, and they are correcting the right taxes, and they're able to, measure and balance between tax collection and harassment, and you measure that, as Ruto said, it's a whole thing of trying now to put pressure on government that whatever little or more you are collecting, are we getting the services for it?
I may not mention the exact numbers, but I know, especially looking at minimum tax, I think the government was looking at almost 20 billion from that particular initiative, but that was stopped by court. Then you have the digital services tax, which I think is quite a welcome move, because you have all this kind of innovation, you have, startups, you have Kenyans who want to purchase things online. The e-commerce, you're talking about 80% of Kenyans having access to mobile phones. So I think it provides a good opportunity for the government to actually get revenue out of it. And the introduction of digital services tax, I think, was timely. So just wait to see as to how it is getting implemented. Because you will remember that there's a focus towards getting guys who are not tax residents in Kenya to actually pay the digital services tax. So it's not like an increase of the taxes that guys would pay here, especially if you've set up here in Kenya, but it's targeting those guys who are non-resident but getting their income or deriving their income out of Kenya, and therefore they should actually get tax out of it.
There are a number of issues within the national tax policy, which I can tell you we are lobbying against as well, which are not in the favor of taxpayers. But the idea for that policy is to have to give investors and companies that comfort that indeed taxes will not change every year as it's currently happening. So it has to go through public participation, which is the current state. So there are discussions between different stakeholders, professional firms, industries, the common man, just to see the impact this is going to have into the future. And once all those deliberations have been done, then they'll go back for further consideration and then hopefully enacted.
And that takes us to the close of our conversation on Business Redefined, where we have been focusing on the Kenya Kwanza administration and the new taxation plans that are being laid out. We shall continue putting a spotlight on issues regarding taxation in light of the new government. Stay tuned.